Guys, I think this is our first actual podcast.
It would be our first actual video cast and podcast.
Excuse me, VOD and podcast.
You are correct.
Let's go.
All right, so I am Jason Kilgore.
I am Craig Kreitzberg, and then most importantly,
I am Ross Jamund.
We're all part of CryptoCrane, available at our Facebook page, YouTube page. You can email us at mail@cryptocrane.com or send us a tweet at CryptoCrane LLC.
don't forget the all-important YouTube channel.
Oh, yeah.
Yes.
If you mentioned that, I apologize.
No, it's fine. We can mention it as many times as you want.
We have a YouTube channel. It's really neat.
We do have a YouTube channel. All right, so let's just start off with a couple of brief topics. Maybe less brief, but important nonetheless. The first of which being, recently, Bitmain, I think in the last week, released and announced the Antminer Z9.
Right.
Which is a larger version of their Z9 Mini and a direct competitor to the A9 Z Master.
From InnoSilicon. Yeah.
Yep.
Yeah, I mean, this is interesting because InnoSilicon, first of all, is trying to build some market share here, and it's very difficult to come up against Bitmain, who's been this juggernaut in all of these mining devices for the last many years.
We should back up and say the Z9 and the Z9 Mini are both from Bitmain.
Oh yeah, good point. Anyway, the A9 Z Master from InnoSilicon, way more efficient, but cost a lot more. And that's always a really difficult balance to figure out when you're trying to decide which one of these is the best option for you. Often people will argue that efficiency over everything else is the most important thing because it'll remain profitable the longest. However, as difficulty increases, as these things come out and get pushed out by the tens of thousands, often the first one to start mining, even if it's the least efficient, will make the most, and it's tough to figure out that calculation.
Sure, but also couldn't if you lived somewhere where they had subsidized power,
right?
Then would you just want the hardest or the highest patching power?
Yeah. Well, it also depends on how soon you can get it.
I was going to say, does that matter as much as you just described being essentially first out of the gate then?
Right, they're both really important. So one of the things that is interesting is that InnoSilicon usually does pre-orders and things that are really delayed. These are in stock right now. Buy one get one free at a roughly $10,000, and then you get the second one in September. Whereas Bitmain, you're looking at a few weeks out to get anything at all. So it makes it an even more difficult challenge to figure out which one's the best.
Yeah, we got our first shipment of Z9 Mini a few weeks ago? And
and then there was nothing for like 2 months.
Yeah.
Like, it was crazy.
And when are the Z9s expected to actually be in a consumer's hands?
Well, the Z9s are, I believe, the first week of September. And those are roughly 4 times faster than the Z9 Mini. However, Bitmain does say that they are underestimating, or they're hoping that they're actually faster than they have advertised. Which
has that been the habit?
Yeah, usually Bitmain is spot on with that stuff. One of the cool things is that the Z9 Minis, even though they're rated at roughly 10,000 souls per second, they have been overclocked to 16,000 souls per second on air cooling, which is pretty impressive. Not all of them will go that fast, but that's a huge overclock, and it shows that there's a lot of wiggle room on these devices, which is why a lot of people are spending so much more on them aftermarket, trying to get their hands on them because they're so rare right now and have so much overclock potential. So anyone who's not overclocking them,
Right.
We are by no means saying that you should absolutely overclock every single miner that you buy.
Will avoid
it's all an
warranty,
exercise in hypothetical discussion and disclaimer.
Yeah.
Jam mineral oil. Fans love it.
So here's big picture. I love that InnoSilicon is bringing some competition because
naming conventions alone are pretty sweet. I mean, Z Master beats the pants out of Z9 or anything like that.
Right.
Bitmain's been pretty much uncontended for a super long time.
Competition is good, and we haven't seen a lot of competition in a few years. So the problem is that Bitmain has the efficiency of scale. they can pump out so many more of these than InnoSilicon. So for every one of them, for every one that InnoSilicon is selling, I bet Bitmain's selling 100, which is crazy. Also, Bitmain has a track record of having somewhat reliable devices, depending on the model. Don't look at the R4; it was horrible.
So do you think one of the reasons for contending with scalability, that's why they're doing a buy one now, get one later?
I think so.
So they can kind of help take the initial funding
right.
to do another batch?
That's not a bad idea, yeah, it could be. I'd love to get my hand on some of these InnoSilicon devices and do some more reviews.
Do they have anything else besides this, or?
Yeah, they got a few different devices. They've had a contender with the L3 Plus. They've had a Dash device. They've got a Decred miner. They've got a bunch of different miners now. So, and most of them right now are actually selling from in stock. However, InnoSilicon charges a lot more. They don't. Bitmain arguably could be charging a lot more too, but they're trying to go for high volume. So, as a company that often redistributes these devices, there's not as much demand for these devices that are at the high end of the pricing market.
Sure.
So,
especially if they have them typically in stock at all times.
Right. Exactly. Well, they're not usually in stock. It's right now they're in stock, which is unusual, but also, as crypto has been declining over the last few months, the demand for these things goes way down, especially since the difficulty across almost all these coins has still been going up. Fortunately, in the last few days, we've seen Bitcoin and the rest of the cryptocurrencies spike about 10%, which is nice. But it really needs to get back up above that $10,000 level on the Bitcoin side before a lot of these miners start looking like really good investments. So, unless you have cheap power beats everything.
Sure does.
So, if I had cheap power, I'd be mining everything all the time.
Everybody would be. Cool. Anything much else to mention about that, or are we going to go on to the next topic?
Well, kind of. We mentioned that the hash rate has been increasing on all these other coins. Kind of leads into the next one, which is Bitcoin hash rate has been growing rapidly despite the price. For those of you who have been around cryptocurrency for the last 4 or 5 years, you'll recognize that this has been always true. That every time there's a huge downturn in cryptocurrency pricing, the hash rate doesn't usually follow. It's kind of a weird thing. Not weird, it's just that a lot of where this hash rate's coming from is from big operators who are planning months and months in advance. So when you have a crypto currency that goes down in value, usually the people adding the most hashing power aren't going to change their mind about that. This is already something that's been in the work for months. They're racking thousands of these things that they ordered months ahead of time, and they're not going to not use them now because cryptocurrency fell in the last few weeks.
Right.
So,
I think it's more of a case where, how can I put this? More parties of that size are just slowly joining the game, for lack of a better term. I find I can't get over that counterintuitive hump. If the value is going down, why has there been a steady increase? And not necessarily, as we see on this chart here, in huge leaps and bounds. It's just been a slow but steady increase all the way up, despite the drop in value.
Right. Great question. These are...
Oh, yeah, I wasn't looking for answers, more just saying, if anybody else is befuddled by this, you're not alone.
Yes, yeah. I would just plan on it always increasing, though.
Yeah, that's definitely the safe way to go.
Yep.
It could be a way of demonstrating that, I don't want to say fanatics, but fans and people that enjoy crypto.
You know what fan is short for?
I do.
Fantastic.
There it is.
Fantasy. But it could be maybe a demonstration that the people in the crypto community are bullish for cryptocurrencies in general. Mm-hmm. That they're still willing to put money into things to generate it and create it, despite the price going down, because they know in the future it's going up.
Yep.
So it could definitely be good news for anybody that's looking to get into it.
Yep. And there's always the people that are still just discovering this stuff, and also who happen to have cheap power or subsidized power, Venezuela. They're trying to find ways to mine regardless of the price, because as long as you run it long enough, it'll be profitable. Given the right electric rates. Yeah. Yeah, a lot of people don't understand, when people talk about the hash rate, like, globally. Just a quick explanation. That's just like, each coin typically has its own algorithm for mining. And when people talk about the hash rate, that's usually the global... Oh, I hit the mic. The global amount of processing power that is being contributed towards that particular coin. So since the rewards on most of these coins are static and usually decreasing over time, usually like Bitcoin, which decreases by half every 4 years, people don't realize that, oh, hey, I'm making $20 a day right now with this miner, but as more and more people jump on board, the global hash rate increases, which, since it's a static payout still, your slice of the pie is decreasing. So a lot of people don't really know how to put that into their math when they're trying to calculate profitability, and it's a tricky one. It's a guess. You don't know where it's going in the future. So we often get people that are always asking us, hey, is it profitable to run this? And it's like, that's kind of like saying, does this shoe fit me? And I'm like, I don't know. Try it on. Let me know. So it's a tricky one.
Was that in reference to the graph where it shows like the different groups of people or pools mining?
I was looking at the hash rate explained portion.
I know that one of the interesting things regarding the graph that we're looking at right now on screen is that there are some places that actually have anonymously contributed to the hash rate going up. It's possible that it could be somewhere like Bitmain that has new miners coming online that they're testing and seeing what the hash rate is.
Definitely.
Could be a secret whale out there just turning hardware online.
Yep. Yeah, it's tough to know whether or not that is a known player or some deep-pocketed dark party that doesn't want to be known. And think about it. If you really were into this and had a huge amount of hashing power, why would you want anyone to know who you were? There's not a lot of incentive.
Garnishes a lot of unwanted attention.
Yeah, exactly. So this doesn't surprise me, but yeah, it would be nice to know whose hashing power that is, especially if it ever gets close to 50%. Be nice to be able to yell at someone and say, hey, you're going to ruin it for all of us. Don't do a 51% attack.
Right.
Which is where someone who has more than 50% of the hashing power could essentially destroy Bitcoin by double spending all of their money. However, it wouldn't last very long. And I think that it would be self-destructive to whoever put billions of dollars into gaining that much, of the hash rate.
Sure.
So...
would there be anything to be gained other than destroying the crypto like
they
that?
could temporarily, while having more than 51% hashing power, they could spend the same Bitcoin transaction more than once. So basically, they would become the longest chain of blocks on the mining node, and whatever they say goes into those blocks goes into those blocks. So it no longer becomes a verifiable decentralized thing. It becomes a centralized thing that's controlled by someone, which is fundamentally the opposite of what Bitcoin wants, or any of these cryptocurrencies want for the most part. The biggest reason why I'm not worried about this is because someone would really want to shoot themselves in their own foot with that kind of move. I guess maybe I'm naive by thinking that all of these players are rational, but I imagine that if you have pockets that deep, you likely are, somewhat intelligent. I could be wrong, but...
Or the Joker.
Or the Joker.
Just want to see it all burn.
Or a state actor who really is more interested in, destroying Bitcoin. Or, someone who doesn't want to see it succeed, but doesn't really care how much it costs to do that.
So I'm looking at you, the
conspiracy
man.
Theory wormhole.
Yeah.
On another
Yeah. I don't think that's really happening.
We should have props so we can put on tinfoil hats.
Oh, yeah. But you didn't bring yours?
I always bring mine.
Got it embedded. You guys are nuts.
All right, so I think those are the primary topics we wanted to have long-winded discussions on. Let's head over to the new stuff. All right, so first up...
Spent their whole budget on that one sound effect.
Well, only the best. So Coinbase recently announced that they had approval from the SEC and from FINRA to purchase 3 companies, and those 3 companies would pretty much give them a really easy not gateway, but a path to offering
so-called security tokens.
Yeah, security tokens, which is pretty coveted by various different exchanges. So specifically, they were going to purchase Keystone Capital Corp, Venovate Markets, and Digital Wealth LLC. However, that information was released on July 16th. July 17th, they retracted their statement saying that FINRA had indeed approved the acquisition, but the SEC has not been involved in the process in a formal capacity. It's interesting that they would announce saying that we have SEC and FINRA and just leave it out there and see what happens.
I feel like this stuff happens all the time. Some rumor gets out, and
it was a spokesperson though, like somebody from the PR department came out and said, "Hey, we are going to buy these companies," and everyone says it's fine.
Yeah, I think it's more interesting that a huge competitor of theirs, well, not maybe huge anymore, but not in terms of the exchange side, but Circle is also trying to do the exact same thing with these security tokens and get SEC approval and whatnot. And to me, all of these things are great news. It makes it so that more legitimate investors can get involved easily. And so you're decreasing the friction, you're lubing the on-ramp, like you're making it so that if someone wants to invest in a crypto token of some sort, it's easier, which to me, that's always a good thing.
Sure.
That's bullish news for me and personally. Yeah.
All right. So the next news story, which we hit on previously, is pretty much in the last couple days. Bitcoin went from about 62 to 6,400 up to 7,500 just randomly, which is fantastic news if you're in the crypto market. Not so fantastic news if you're looking to get into the crypto market. But timing this thing is impossible. No one really knows why it went up.
No one ever knows why it goes down either. So
that's fair.
Manipulation.
Sure.
That's what's great about crypto. It's totally unregulated right now, which is also what's horrible about crypto. So you have every person out there who has always wished about, hey, I wish I could manipulate the stock market. What could I do instead? Oh, wait, crypto.
I found a thing.
Yeah.
Sorry.
Yeah. So I love seeing it jump up 10%, but I always have that same opposite reaction when it drops down 10%, and usually there's very rarely a reaction. Someone big bought a lot of coins. Someone big sold a lot of coins. Or cause a chain reaction of everyone's bots that are trading these things every day, which is also another interesting area.
As somebody who's really, really new to the industry, cryptocurrency as an entity, the entire idea of it, I'm curious, knowing that you've been involved in this stuff for several years now, has there ever been any evidence of a correlation between jumps like this and new products or miners, or deals like the one that maybe happened and then kind of didn't happen that we were just talking about? Is there any tie-in?
Well, let me take it one level outward, which is
please.
News used to affect the price of cryptocurrency way more than it does now. It used to be every little time the media would mention Bitcoin, it would jump up. Because, oh my gosh, people are learning about us. Now we're at the point where kind of everybody who cares has heard about it and has formed an opinion about it. So now it's, a battle of how can we make this actually worth using? And that's a whole other challenge that is beyond me. And Bitcoin likely won't be the thing that becomes easily usable in the near future because of the direction that it's going. it might be something like Ethereum or a dozen other coins, Nano or Stellar or something. But I do believe that it'll be one of those things. I just don't know which one. So back when news would affect the pricing, it was really exciting because you'd see positive news, and it would usually correlate to positive price movement, or perhaps actually that would be a sell-off at that point because everyone who already knew about the positive news was then selling on it actually hitting the mainstream. But I don't know what else to say about that.
Okay, that's fair.
So yeah, there used to be a lot.
I have nothing to say, so anything is better than nothing.
I feel like lately the correlation has not been easily seen.
Okay.
And by lately, I mean the last year and a half, 2 years. There's a lot of psychology to the people who are trading these things, and I think that's one of the back to the hash rate going up. One of the things that I love watching is the debate between people who think that hash rate going up will lead to higher prices in the coin because they believe that it makes it more difficult to acquire the coin, and they're applying some loose economic principles to say, well, if it's harder to gain this scarce, commodity, then therefore the value must go up. But my personal opinion is that it's the reverse. It's that hash rate follows price.
The harder it is to get, the less it's.
But only in one direction. Basically, every time crypto goes up, more people decide that they want to get on board, and therefore the hash rate goes up. I don't believe that the hash rate going up will have much impact on the price of the coin. Part of that is because the floating amount of coins that are being traded is so much greater than the amount that are being mined right now. So, when you think about if every single miner in the world did nothing but sell instantly right now, it's still just a drop in the bucket compared to how much is actually being traded on a day-to-day basis. So yeah, it would be a downward pressure, but it wouldn't be substantial in my opinion. A lot of people think, oh man, but what if all the miners start selling all their coins? And it's like, well, they're probably already doing that. That's not news. But yeah, I'm just gonna keep going off on tangents if we.
No, good.
Buddy, I think that's the whole point of this.
Yeah, maybe you're right.
Sure is. All right, so next story. The world's first
bank-owned cryptocurrency exchange.
Yep. So SBI Holding launched its first crypto exchange platform named VC Trade in Japan. You have to be a resident of Japan and between the age of 20 and 70. So likely anybody listening to this will not fall in that category. They're only accepting retail investors. They're not doing any corporate or institutional investors. And they currently are only trading XRP,
Ripple.
BCH, and BTC. So yeah, Ripple, Bitcoin Cash, and Bitcoin itself.
Mm-hmm. Interesting.
One of those things is not like the other.
Yeah, that is true. Ripple was actually the first one that they did when they were doing their more or less beta.
No way, a bank-owned thing?
Yeah, I was going to say.
Yeah.
When they were doing their beta and only letting, I think, 20,000 people in, they were only doing Ripple, but now that they opened it up more publicly, they opted to do Bitcoin Cash and Bitcoin as well.
Got to maintain that street cred.
Sure do.
Yeah. I mean, it's interesting. I hear bank-owned, and it instantly puts a bad taste in my mouth because a lot of the things that attracted me to crypto are the fact that it kind of is a big middle finger to the banks, not needing them as a middleman. So when I hear bank-owned, I'm like, yay, more legitimate, but also, what's the catch? So
sure.
That's how I feel.
Doesn't surprise me that it's Japan because they're very welcoming to cryptocurrency.
Yeah, they're way ahead in crypto. Yeah, that would be very nice if we were to catch up with that. Not holding my breath, though.
One day. When we catch up to their APMs. Next one. So Bitcoin giant BitMe opens up a 20,000 square foot office in Silicon Valley, specifically in San Jose. The theory is to try and get a larger global footprint, get people probably in Silicon Valley under their umbrella so they can either get more tech in, more people, more minds, do something more amazing. lots of maybe reasons.
Yeah. I haven't read through this whole article, and I'm sure it probably says what Bitmain's thinking. But the first thing I see when I see Bitmain talking about not moving, but opening a giant place here in the U.S., is they want out of China. And I only say that because they've got to be hemorrhaging their profits to the Chinese government right now, and I'm sure they would love to keep more of them. And the U.S. would be a much better place for them if they were to ever move in the future.
Sure.
I'm totally speculating. I have no reason to. I mean, obviously their manufacturing is in China, and it will likely stay in China forever, until something else better comes along. But
do you think they want just like an office closer to where they're opening up their mining centers?
Maybe. I think they're really trying hard to diversify away from just crypto too. So it could be something unrelated to crypto. I mean, we've seen with their Sophon. Launch that they're trying to get into AI, gear and stuff like that, and if you think that it's wise, they're trying to make sure that all their eggs aren't in one basket. So this could be more of that. I don't know. It's very interesting.
Do you think this has anything to do with their IPO later this year?
Yeah, possibly. That could definitely be related. I'm curious. I feel like they're. Usually when you IPO, you're looking for investment so that you can do something with that money. I'm curious what they want to do with that money. So,
buy more web browsers.
Yeah, they just bought a controlling stake in Opera, was it?
Yep.
Yeah. So,
Jeff 50 million to open up to have controlling interest in Opera. And the first thing they did, like the day after, is they introduced an Ethereum wallet into the web browser.
Yeah, that's pretty cool. Yeah, very cool.
Too bad nobody uses Opera.
Yeah. Would be nice.
Actually, according to this, it's widely used in Africa.
Oh,
good.
I just hadn't said anything in a minute.
Well, no, but I mean that's fair. But also, Africa's actually becoming a little bit more welcome to cryptocurrencies too. Which country was it? It was just a couple of weeks ago. They opened up. They made cryptocurrency not illegal.
South Africa.
No. I'd have to look it up.
Anyway,
there's no time for that.
But here's the thing about Africa, though. It's really the definition of the people that a lot of these cryptos were originally designed to be attractive to. The people who are underbanked and don't have a lot of wealth. The people that you should be able to do microtransactions with and don't have to. They're primarily a mobile device type of, people, because everyone has a cell phone and you can load up a wallet on your cell phone and transact peer-to-peer using a peer-to-peer cash system. That's a super attractive thing that this world needs. And since there isn't a lot of profit to be made off these people, at least not ethically, you don't see a ton of banks going in there and rushing to provide services for these people.
Sure.
And even when the banks do come in and try and provide service for these people, the people don't trust them. So, I mean,
fairly so.
Yeah. Africa seems like a ripe place for crypto. There's, I see a lot of potential for growth there. So.
The answer to the question earlier was Zimbabwe. It was Zimbabwe that recently made crypto.
They've never had currency issues, right?
I don't think so. Next story. Billionaire Peter Thiel and Bitmain lead second investment round into Block.one. Peter Thiel from PayPal notoriety and Bitmain from Bitmain notoriety. So they didn't release the amount that it was that they funded, but those two are the headliners of the second round.
Now, hang on. Of course, I know what Block.one is, but just so I make sure that you have an accurate understanding, would you mind if you would maybe share what Block.one is?
So
I would love to.
Okay, I don't actually know what it is.
They launched the EOS token last year, which was the highest initial coin offering, ICO, to date. with lots and lots of controversy around it. It's I don't want to state my opinion on EOS yet. It's too early. So
that seems like a very reasonable
which means
opinion.
He's probably going to buy in super hard.
No, I don't.
He loves it.
Yeah, it would be total speculation at this point.
Yeah, the best kind of elation.
Yeah, I've seen some good arguments that it's not a great thing, and I've seen some good arguments that it's amazing. So we'll see.
Okay,
we will see one day.
I pretty much just described every ICO ever, though.
Yeah,
I was going to say.
Good.
Yeah.
We'll save this and we will just insert this clip later.
Yeah.
In very interesting news next up, you can search for cryptocurrencies on Craigslist.
Yeah, and people selling in cryptocurrency, for cryptocurrency. So hey, I got some Bitcoin Cash burning a hole in my pocket. I want to go buy something. Craigslist might be the place.
This envelope may contain concert tickets. It may contain a child.
Yeah.
We will only accept cryptocurrency, though.
Yes. Craigslist.
Craigslist.
Oh, it's yours, isn't it?
It's a wonderland. What can I say?
It is a wonderland.
Long live casual encounters.
I think it's a good thing.
Casual encounters.
There are so many marketplaces that just feel like they're on the brink of accepting cryptocurrencies. eBay seems like they have been close for years. Basically they've purchased companies that deal with cryptocurrency. They are very open and friendly to selling cryptocurrency related assets on their platform. So having Craigslist do it might stoke a fire. Who knows? Probably not, but
probably not. No.
It's nice to see more companies coming along. And
15 years from now, 7-Eleven will be laughing at everybody. Everybody that laughed at them, and we got a cryptocurrency ATM. It's right here. Who's laughing now?
Yeah.
Not Craigslist.
Those things are weird.
Definitely not Craigslist. All right, so last but not least, the most juiciest of stories.
Oh boy!
Kodak Cash Miner.
Totally not photoshopped at all.
Cash with a K.
Oh yeah, I noticed that too.
Yeah, how are you gonna sell that sweet mining hardware if you don't sell cash around?
High quality with a K too.
Pay no attention to the Antminer behind the curtain.
Yeah.
So a brief history is not too long after Bitcoin started increasing in value significantly. Started seeing a lot of companies do interesting things with trying to incorporate the word blockchain or Bitcoin or something into their stuff. Cafes coming up, all sorts of things.
Yeah.
Kodak kind of jumped in a little bit early and announced at announced at CES that they were going to be releasing their own miner and their own cryptocurrency to mine said thing. I read it, I laughed a little bit, and I died a little bit more on the inside. Fast forward to about 2 days ago, and Kodak officially tells, Kodak CEO informs BBC that the SEC has blocked the Kodak Cash Miner. As said, it was announced at CES. The plan was to lease a cash miner to a user for $3,400 for 2 years. And any money collected during that time was to be split in half. Half going to Kodak, half going to the user. For the device to be profitable, though, a lot of analysts and things were doing some research. It would require Bitcoin to hover around 28,000. When this was originally mentioned, it was said about 9,400, but they didn't calculate difficulty increasing.
Right.
Which it has increased exponentially since then.
Yeah, it probably will continue to.
To make this plot even thickier, Spotlight, is the subsidiary responsible for this entire project, was supposed to set up 80 devices in Kodak's office and said that they were up and running. However, Kodak never saw them. Despite Spotlight saying, no, we did that, it's fine. Kodak's like, no, you didn't. You're not here. Fast forward even further, Spotlight, since this story has released, said that they're going to take their mining operation privately and head to Iceland.
Oh, no way.
Because it's cheaper and cooler to run them.
Iceland is a very popular Bitcoin mining destination.
Very popular, especially if you have trucks.
Yeah. was a huge theft of a mining farm there not too long ago.
Yep.
Like thousands of Antminers are stolen.
All of them.
Yeah, and like they caught the people who stole them, but they don't know where the devices are. I don't know if there's been any new developments on that story, but it was definitely interesting when it happened.
They probably took them to rebuild the coral reef.
Yeah,
jamming them down there.
Just throw them overboard.
Yep.
They probably just smelted them down and sold them for scrap.
Yeah,
it's best use of money.
I mean, depending on how much electricity costs, it might be.
It was interesting. Kodak, the moment that they put blockchain in their name, their stock price spiked really hard.
Yeah, I forgot to mention that.
Yeah, and it was like, ooh, that's interesting. And there was all sorts of speculation about what they were going to do. And one of the leading things that I thought sounded really interesting was that they were going to start tagging, individual artist photos on a blockchain and allow the photo attribution to be traced back to whoever actually took it, which would be really powerful on the internet. And they even had, there's even talk about them possibly having their own algorithm that was going to, look at a photo that had been resized or altered and still somehow identify the original, piece that it came from, which would be cool stuff. But I don't think that's happening anymore. So we'll see. Or maybe it never was going to happen. Someone should do that, though.
Another new to the game / naive question. Cryptocurrency is a decentralized entity.
Yeah.
What is it about this scheme, which seems like the appropriate term, that the SEC was allowed to step in and say, no, you can't do that?
Good question. I imagine that the SEC has all sorts of authorities to tell companies that they can't sell vaporware to, investors.
Okay.
And essentially, since you are paying them and not receiving a physical product, you're essentially paying for a service that is totally based on speculation. Seems like it's right down the SEC's alley in terms of their governing authority.
So it literally comes down to then that they were trying to rent this stuff. Had they just been outright selling these miners to people,
that would have never even had a second thought. I think part of it is also the way that you advertise. I think is important too. If you're basically telling people that they're going to be making X number of dollars in so many years, it seems kind of scammy.
Sure.
Even Bitmain has never
something flagrant false advertising.
Yeah, even all these mining companies are very careful to basically just say, look, this will perform this many hashes per second, and that's it. Do what you will with it. Do your own math. I think Kodak probably. I think the SEC probably made the right move in that.
Oh yeah, I wasn't necessarily second guessing the decision, more just wondering what about it was different from.
And going back to your initial statement that cryptocurrencies are typically decentralized, typically yes, but not all of them are. I mean, you have things like Ripple, which are a type of cryptocurrency that is not decentralized and doesn't hold a lot of the principles that have made cryptocurrencies attractive elsewhere.
It should be mentioned, the same day that this news story came out, the price of Kodak stock went down, 10%?
Ooh, yeah, that's ouchie.
Womp womp.
Yeah,
it is an ouchie.
Cool. So I think that does it for news stories, which brings us to Q&A. So we got a couple questions in. If you have a question that you would like to ask the CryptoCrane crew, feel free to send them to mail@cryptocrane.com.
I like that, the CryptoCrane crew. Sorry, excuse me.
Crew@cryptocrane.com. Should we add that?
Sure. Yeah, whatever you want. So Steve wrote in saying, what gives Bitcoin value?
Hi, Steve.
Thanks, Steve.
Yeah.
Sound like every...
Stay tuned for the next 3-hour segment, which that question is answered.
Don't worry, every relative of everyone who's ever talked about Bitcoin has been asked this question. So
yes.
It's typically the best answer is to reverse the question and ask them what they think gives their dollars value. That's that's a much better question, because most of the time they'll turn around and they'll say the government or something, and they don't really understand what they're saying or what that means, or they'll say the Federal Reserve or something, and it's like, yeah, that's not really what gives your dollar's value.
Or if they're really old, they might say gold.
Yeah, if they're really old, they might reference a metal that used to be attached.
Sterling silver.
Right. Since our money is fiat and doesn't have any sort of real commodity backing it, it's good old-fashioned faith, which gives our money value, and ultimately beyond that, supply and demand. A lot of people don't realize that supply and demand dictates the price of our dollars as other countries buy and sell our bonds. That impacts how much our money is worth. In fact, our money fluctuates a lot over the course of a decade, up and down, sometimes as much as 20-25%, and we don't even feel it usually, not directly, because it usually gets absorbed by the companies doing the importing and exporting, and then eventually passed down through the material cost and into your products that don't all change in value at the same time, so you don't feel it the same way. But essentially, the cryptocurrencies that have value are also just supply and demand. They meet the qualifications for money, which is they're scarce, they can't be reproduced, they can't simply be duplicated. So if I have one and I can make 1 billion of them, why would they have any value? They're scarce, they're fungible. If I give you one and I give you another one, those are both equal to each other, even though they're different. And I can easily move them from one place to another, which is why gold often is not used as a currency. It often has the other attributes, but isn't easy to transport and transact with. Given that there's a limited quantity and people want it, it has demand, and since there's a limited supply, it has value. The end.
Good answer.
Very well done.
It's only like the 6th or 7th time I've heard you try to explain that.
Yeah, it's
doing really good.
Yeah.
You should see him at parties.
Oh, he's a hoot.
It's the last thing I want to talk about at parties. You do what? Nothing.
Do you have any crypto coin in your pocket?
Yeah, here you go. Like a gum wrapper.
You origamied into a coin.
See that code on the inside, though? That's my private key.
That'd be a really good idea for a business card.
Better than V9s.
Yeah. No, nothing would be better than giving away a V9. Cool. So the next one comes from Elmir. Which pools should I mine to?
Oh. What day is it? I mean, that's a variable question. First, depends on what coin. Okay, first depends on what you can mine. You've got a GPU miner. You've got a lot of options.
Sure.
So it usually pays to figure out which coin you're going to mine first, which again is a whole other can of worms. But let's say that you're using an ASIC that can only mine one kind of coin. My preference is to stick with pools that are auto profit switching and can jump from one coin to another that are all using the same algorithm. So let's say that you have a Antminer L3++ that can do the script algorithm, which there are 50 or 60 coins that use the script algorithm as their base hashing algorithm. Therefore, you can use that miner to mine 50 or 60 different coins.
I didn't know that.
Right. So usually pools are dedicated to one coin. And so, hey, I want to go mine cannabis coin, which is a script coin. I'm going to go to that pool and mine that coin and then sell it for whatever I want, or maybe I want to keep that coin. I don't know. What happened is enough people got tired of trying to figure out which one is most profitable and jumping around that the pool started saying, hey, we'll figure out which one's most profitable. We'll do all that calculation. You just give us your hashing power and we'll point it at whatever is the most profitable at that minute. And then the moment that we get that coin, we'll convert it to what you want or sell it for Bitcoin or whatever. So some of the most popular ones that do that are NiceHash. Actually, NiceHash takes a whole nother level. They're actually reselling your hashing power to other people who are doing that. So that's a whole other layer on it. But the nice thing is you get a more predictable return with those kind of pools. You end up with a more diversified list of cryptocurrencies that you are ending up mining, and you don't have to pay attention to them. So that's my preference. The downside to those types of pools, prohashing.com is another pool that does the same thing. The downside is they usually have higher fees. So you might be earning slightly more than you would have if you were mining the coin directly. However, you'll usually give up some of that in the higher fees that the pool takes. And it's sometimes really difficult to tell exactly how much the pool is taking. They're not always super transparent. Also, by the time you're watching this video, there's probably like 18 new pools that have come out. So, you kind of have to, pay attention to like the forums and where people are going. And there's a lot of good places where people talk about this stuff. But if you're just asking, hey, what's the best pool? There is no one answer. Again, it's personal preference, and there are a lot of different factors you have to take into consideration. One of the biggest factors is how reliable is the pool. That's a huge issue with pools. They go down all the time, which is why most Bitcoin miners or cryptocurrency miners have a spot for multiple pools. Not that they're mining to all those pools at once, but they mine to the first pool, and then if that pool goes offline, it'll fail over to the next pool, and so on. And dedicate all of its hashing power at that whichever pool is active at the time.
Sure.
There are smaller pools that take less fees, which is nice. And there are a lot of pools that require zero registration, which is also nice. You basically just use your wallet address as your username when you connect, and it knows to pay back out to that username, and therefore I used to mine years ago to a Bitcoin pool called Eligius, which was you just mined with your Bitcoin address, and it was a roughly 0.1% type pool fee-wise, so you were barely paying anything. You set it at 0%, but they would take some of the block rewards. So anyway, it was a great pool. It was reliable, and I liked it a lot, but then came other pools like pool.bitcoin.com, which allows you to both mine Bitcoin Cash and Bitcoin and switch back and forth between them automatically, depending on which is most profitable, and they often jump back and forth between which is most profitable. So, there's no one good answer to that. So, if you've got enough hashing power, you could have your own pool and just basically solo mine. It would take a lot of hashing power for that to make sense, though. I don't think you can do it with
I like playing the lottery.
Yeah, that's what it is. You're playing the lottery. So,
YOLO.
Yeah.
Carpe diem.
Yeah.
Kick my own ass for saying that. Sorry.
Carpe diem so hard.
What's our next question?
So the next question is, what are the differences between the cryptocurrencies?
Wow.
The names.
Yeah.
The values.
Yeah. I mean, one of the differences that I always pay attention to that first, I think the most important thing is, what problem is it trying to solve? That's the best first question to ask. Bitcoin's had an identity crisis in the last couple of years, and I feel like they don't really know the answer to that question anymore. But there's other currencies out there that are like, hey, we're trying to create a peer-to-peer cash system that replaces money, and that's a pretty straightforward goal. It's lofty, but it makes sense. So their goals are always to decrease barrier to entry. We want you to be able to use it as easy as you use cash, or even more easily, and have extra features on top of it. So identifying what problem it's trying to solve is probably the biggest difference between all these different cryptocurrencies. But also, I think it's important to know who controls it. And by who controls it, I don't mean like what central group controls it, but do they give most of the control to the people mining it? Do they give most of the control to the people who currently hold it? Is it a proof of stake system versus a proof of work system? Proof of work means that you're doing processing, you're dedicating your processing power, and the more processing power you have gives you more control over it. Whereas proof of stake, that's what you do to mine. With proof of stake, you are basically creating a node, a server node essentially, that is helping to transact all of the transactions, helping to process all of the transactions, and you have to load that up with the cryptocurrency itself. So, like with Dash, you need 1,000 Dash to make a master node, and with that master node, it then automatically will mine coins for you while processing the transactions on the network. The advantage to that is that it uses barely any electricity, as opposed to proof of work algorithms or mining schemes that use tons and tons of electricity, but it's very difficult to attack because you have to build your own hardware to attack it. The idea is different, and then you actually have Dash, which actually has both proof of stake and proof of work going on simultaneously, which is kind of a cool mix. So, looking at who controls it is probably the second biggest piece of the puzzle to me. The community behind it is also a ginormous piece. It probably overarches the other two things altogether. I mean, you've got, a lot of these coins that are just, they're just here and then gone. And you see a cool development group, and then you never hear anything more about it, and it just fades into the ether. Not Ethereum. The community around it, it makes a huge difference, and knowing the mindset of that community is also really important. A lot of times those community you can pretty easily identify. This community is really just interested in pumping up the price. It's a speculative community. It's not really interested in the technology, without the idea that technology is simply just a means to the end of having a high price thing that they can cash out of.
Sure.
Those are the things that
pump and dump, baby.
Yeah, pump and dump. Yeah, those are the things that I think are not worth looking at and doomed to fail pretty quickly.
That's their objective, is to get it popular.
It's tough to know what's what, though, when you just start reading the headlines, though, because there are so many shills out there that are being paid or are self-motivated to just talk about their cryptocurrency in every platform they can, trying to drum up, name recognition for the idea that someone out there is going to go, hey, that sounds like a cool idea, and that white paper looks somewhat legit. I'm going to buy a bunch of that. It's...
Wait, you're saying people lie on the internet for money?
I guess so, yeah. I don't want to burst your bubble there.
What's the world coming to?
Yeah. I don't know. I'm not going to go into... I couldn't go into what all the differences are between all the different currencies, but...
Nor should you be expecting.
Right.
However, the topic for next time is what's the difference between BCH and BTC.
Ooh, yeah, that's good.
Teaser.
Dun, dun, dun.
Bitcoin versus Bitcoin Cash.
All right. Well, I don't think I have anything. Do you have anything?
This was fun.
Yeah. We should do this again.
We should do this again.
Yeah.
And again and again. And again.
Like maybe in 2 weeks?
2 weeks.
2 weeks sounds good.
Sounds good.
Thanks, everybody. Hey, good first show. Hold on.
We did it!
Ross, you obviously were the pack mule here. Very nicely done. I think we have nowhere to go but up, and hopefully all 10,000 of you listening feel the same way. Well, listening or watching, I keep forgetting that video part.
Yeah?
It's the whole 21st century.
Yeah?
Bright and shiny.
We can see our beautiful faces or hear our sultry voices. Or both.
I just got really intimidated.
All right, that'll do it for us here at CryptoCrane.
Thanks, everybody.
Thank you. Remember, if you have anything, any questions, comments, concerns, hit us up at mail@cryptocrane.com. Thank you.